I was waiting for you to click on recording because I wanted that to be captured in the recording. I think you have put together a fantastic lineup. And so congratulations. It's truly exceptional. And again, as we were discussing off the camera, I mean, on the camera of the record, is that you try to provide so many different perspectives. And I think this is exactly what we need, especially when we tackle law and tech or law plus technology. So I'm very grateful, looking forward already to the Q&A, which for me will be the most interesting part. But before, I guess I have to trigger some questions and comments. So I will share my screen and hopefully this will work. Okay, so as you can see, the idea for my presentation is to first discuss what I mean by blockchain plus antitrust. And this will lead me to explore why I think we need cooperation between the two. And I suspect that not all of you might be expert in blockchain or competition law or antitrust, or actually maybe none of those two. And that's perfectly fine, because my objective is to try to see if indeed we could foster cooperation between law on the one hand and technology on the other. And it might apply to IP or data protection or financial law, whatever is your field of expertise. And on the other end, it may also apply to AI and quantum computing and many other things. I was actually finishing the draft of an article dealing with, in a sense, I guess, AI plus antitrust this morning that will come up in just a few days. So that's the idea. And then after that, I will ask you a question and I will ask you to vote. I will explain how. This is very easy. And depending on the outcome of the vote, I would then choose to explore path number one, which is the yes one, the yes track, or path number two, which is the negative one. So very important vote, as you can imagine. So make sure to make the right choice, and knowing that you will never know what's behind the other track. So that's kind of the surprise for in about 10 minutes. But for now, as you indeed, Caddy, mentioned, I published a book which came out in October 2021. I've put the link here to the QR, to the open version access of the book, the QR code and the link to it. You can find it very easily on YouTube. I'm also more than happy to share the link to this presentation because I've included quite a few links and references. So feel free, I'll just put it in the chat at the end of the conversation if I don't forget. If I do, just feel free to send me an email. It appears at the very end of the presentation. So pretty much everything I would say is actually covered in the book, although it moves really, really fast, which is a challenge, but also fascinating. So I will cover some ongoing and development which are still unfolding before us. As you also kindly mentioned, I've decided last month actually to record one video per chapter of the book, just for, I guess, the purpose of, education. If you want to use it in the classroom or to learn about a few concepts, you can access that. Not everything is yet public. I'm putting videos out on Mondays and Thursdays, 1 p.m. So one indeed just came out about an hour ago about the meaning of decentralization and what it means and how to achieve it. So feel free to just follow that if you like. This was fun for me to do, and hopefully you can find it helpful. That being said, when I started the book, I wanted to start from the very, very beginning. And so I've tried my best to identify, in a sense, legal tech or legal or regulations regulating technologies. So we could discuss for more than an hour what's the meaning and the definition of technology. So I would just use here a very basic definition, a technical meaning to a technical problem. And so here what you see is that already in the Code of Hammurabi, so nearly 4,000 years ago, what they were doing in Article 55 is that they were regulating the negligent opening of a canal, meaning that if you were opening the canal a bit too much and overflowing the field of your neighbor, then you had to compensate your neighbor for that. If, on the contrary, this was good for your neighbor, then you were not entitled to ask for compensation because this was your fault. And this, I believe, is pretty much the way we approach law and technology, even to these days. What we do, and if you've been to law school, I'm sure, have been trained that way, which is the way I was trained, is that we only discuss the problems. So first year of law school, we will tell you the tenant is not paying the rent. You're the landlord. What do you do? So that's only the problem. And then what we do is that we apply the law, right? We would say in France, article blah, blah, blah of the civil code, and it may depend on the legal tradition, but that's pretty much the logic. And indeed, it will be weird, to say the least, for me to arrive in the classroom and tell my master's students, today I'm going to discuss when everything goes well and when we do not need lawyers. And yet I think this is what we need to consider so that when we address the problem, if possible, we address the problem in a way that preserves what's good about a technology or situation. So that's the overall idea. Now, the reason why I think this applies specifically to blockchain and antitrust, and the dynamic will be entirely different if we talk about blockchain and data protection. But for blockchain and antitrust, I think there is a strong dynamic here in favor of cooperation between the two, because they are about decentralization. Now, decentralization is overused, to say the least. So what I've done also, and that's chapter 4 of the book, the video that I've published this morning, is that I've explored throughout the centuries what's the meaning of decentralization and what it means, and the way Tocqueville and Bastiat and others have used the term. And I came up not with the definition of the concept, but actually the one that I use throughout the book, which is a concept to measure the autonomy that you have in choosing where you will act. So to be very concrete, if you need to ask someone permission to choose something that you may want to do, then you're part of a centralized ecosystem. So for instance, if you cannot choose the way you're going to educate your child, then the ecosystem is centralized, at least in that very specific respect. If on the contrary, you can choose for yourself without having to ask for someone, can I choose for myself the way I want to educate my child, then you're part of a decentralized ecosystem. So that's the definition that I use. And as you can see, at least that's what I came up with at the end of my research. I think that the concept is actually dynamic. It's not enough to just say that one ecosystem is centralized or decentralized. It may changes over time because you have different dynamics. If we go back to Lessig, you have the law, the markets, the norms, all that changes all the time. So it's important to try to capture this if we can. And it's multi-level. I will be more specific in a minute, but I think the idea is that it's not enough to just take one element out of an ecosystem to qualify whether it is centralized or decentralized, and to say, therefore, the entire ecosystem is the exact same way. And yet this is what we do in blockchain, but I will come back to this. So this is the definition. And now if you haven't been trained in antitrust, or as we say in Europe, competition law, now is the time. I had 2 minutes to explain what this is, at least the very logic. And it's quite easy, at least the logic of it. What I've done in the book is that I went back to the US Senate at the end of the 19th century when they were discussing the Sherman Act, which is not the first regulation about competition law, but at least the modern one, the one that introduced modern competition law. And what you see is that John Sherman, already at the time, was very clear that the objective was not to, I quote, cripple combinations of capital and labor, but to prevent using that combination in a way that will hurt competition. So you see that the idea is to protect a process, right? It's important that the market will stay dynamic. But at the end of the process, you have centralized outcomes, then it's fine. If you are the best company, you have the best product, the cheapest product, it's great if you can capture the market and have all the customers for yourself. But we want all the companies to be in a position to challenge you. That's what matters. And this is what you see in modern antitrust, same in Europe, with the equivalent of Section 1, which is Article 101 of the TFEU, and Section 2 of the Sherman Act, which is Article 102 of the TFEU. What you see on the one hand is that we prohibit companies from combining their resources in a way to create a cartel or a collusion. Why? Because when they do that, then they are not free to behave the way they want on the market. They have to play by the rules they have agreed upon, which in turn means that they re-centralize the market. And Section 2 is actually the same logic, a bit different. What we prohibit here is one company abusing its market power. Why? Because when one company does that, then the other companies cannot actually behave the way they want. They have to leave the market in a way which is not coming out of fair competition, et cetera, et cetera. So again, this re-centralizes the market. So that's the idea for antitrust. Now, if you are training antitrust but not in blockchain, now is the time where I explain what blockchain is. And again, I only have 2 minutes. You can explore the book, and you have many, many resources all over the web, actually. But my best attempt to define a blockchain, or at least to visualize what it is an ecosystem with different layers. And I think especially for lawyers, that's important to understand and to capture, because you may have problems at one layer, but if you want to tackle the problem, it might be that you have to tackle the problem at a sub-layer in a sense. So let me explain why. First, you do have the real space, right? I think at least we think we live in the real space. I'm not going to get into those discussions. Fascinating, by the way, but let's say it's real, at least to us. Then on top of the real space, we've put physical infrastructures to build the internet, those cables between continents. If you control that, of course you control the internet, right? You could say, well, that's it. I'm going to cut the cables, or cut access to it, and there is no more internet. So if that level is centralized, then yes, you control the entire ecosystem. So here, centralization of that level matters very much. On top of the internet, we have the blockchain database, which is a ledger, a Excel sheet in a sense, if you want to have something in mind, with very specific characteristics. It is immutable, decentralized, distributed, pseudonymous. I can explain if you want me in the Q&A what this all means. But the very basic idea here is that it uses the internet to function. So if you cut internet access, there is no more blockchain, right? Because blockchain is actually distributed on all the computers, and those computers need internet to coordinate. So that's the logic for the ledger, on top of which you have what is called the infrastructure, which is the software that you have to use to put information into the blockchain. It's called the core software with lots of rules. On top of that, you have people using the software, putting information on the blockchain with economic incentive, social incentive. That's the blockchain governance. On top of that, you have blockchain applications. It could be the equivalent to Airbnb, Uber. You have heard maybe about the Web 3.0. It can also be cryptocurrencies and the users, you and me. Now, often what you read is that if the blockchain governance is centralized, then it means that the entire ecosystem is centralized. And I think that's a mistake. It depends. Of course, that's a typical lawyer answer. But let me take a concrete example. If indeed, let us say that the mining power, which is the power to validate transactions before you record them onto the ledger, if that power is centralized, because it's a bunch of companies doing most of the work, this could create an issue. But so far, I've never heard any blockchain developer telling me I've decided not to develop something on top of the Ethereum because I think the mining power is too centralized. It might be the case if it's 100% centralized, but a bit of centralization at that level actually means potentially more scalability, and it goes faster, and it's fine. So you see there is a balance here, and I think it's wrong for that reason to assume that because Ethereum is, let's say, centralized at the mining power level, that therefore everything is centralized. It depends, and also this changes over time, actually on an hourly basis. So it's important to try to capture all this. Now, the beauty of it, I'm sure you've heard about that, it's more complex, but the idea is that you get rid of the middleman. It allows you to transact in a way which is free, and to some degree that is true, because indeed, if you want to buy Bitcoin, no one can prevent you from doing that. If I want to send you a Bitcoin, no one has the technical or economic power to prevent me from doing this. And where you see that it creates decentralization is that indeed I can choose for myself when I transact and the reason why I transact, which is not something that we have in the centralized world, in a sense. So the idea here is, again, decentralization, but you try to achieve it from a technical perspective. So long story short, what we see is that for both antitrust and blockchain, centralized outcomes are welcomed. If you design the best blockchain, then great if you have the most users. Same if you design the best social media, perfect if you have the most users. However, what matters is that the process, the possibility to compete should be decentralized, and people should be able to take decisions for themselves as to how they behave. That's the idea. So far, so good. But we have a problem, which is that there are what I call in the book mutual aggressions between the two. You may call them differently if you will. But the idea is that there are indeed some tensions. And I just want to give you a flavor here before I ask you to vote, and then I will dive into a few of those. What we see is that blockchain can be used to infringe competition law in the real space. I will explore how that is using smart contract, for example. Something different, which is that you may see competition law infringements within blockchain ecosystem as to the way it functions. And as we know, and you may have heard about that or read about that, the cypherpunks and Stuart Brand and the DIY movements, the idea of blockchain is anti-system. This was actually the message encoded in the very first Bitcoin block. It took Satoshi Nakamoto to the headlines of the Times that day, which was about government putting more money into central banks. And this was not random, right? This was a way to say, we're going to create a system that's different outside of what exists. So that creates tensions. And you have some more on the side of antitrust, in a sense. What you see is that if you apply the law, it might be, not always, but it might be that you have to sanction people using blockchain, which will create some tensions. It might be that you impose remedies, such as, I want you to stop the smart contract. I want you to re-centralize the blockchain, to name one person in charge. I think this is extremely hard, but if effective, we can discuss that. This will create some tensions. And antitrust, and that's the same, by the way, for pretty much the entirety of the law, is applied by centralized institutions. Antitrust agencies are very much centralized, and I think we can potentially solve that using blockchain, but I've decided not to include this in the presentation, but again, maybe for the Q&A. So those are the tensions. Now, against this background, which is looking for the same objective, but tensions on the way, I think we have two possible paths. First, we go for the confrontation, which is what we've been doing since the Code of Hammurabi. This is our tradition, pretty much all over the world, which means very concretely, if you're a lawyer, that you design the law in a way to achieve your legal objective without ever taking into consideration whether this may create a negative impact on the technology. This is none of your business, right? You just design the law and enforce it just with one thing in mind, which is achieving your objective as a policymaker or regulator. That's one. If you're a computer scientist, it's the exact opposite. You design your technology never considering if it may benefit society, if it may ease legal enforcement, but just trying to achieve your objective. This is one way. The other way, the cooperation way, means that if you're a lawyer, of course you try to achieve your legal objective. I'm not here to argue that the law is not good and everything should be tech. I'm not a solutionist in that regard. But what you try to do is that when you apply the law, if you can, you try to preserve the technology and its survival chances. Same when you design the regulation. And if you're a computer scientist, it also means that, of course, you want to achieve your objective, but it may be that sometimes you would say, okay, I will design it that way because I think this is better for this and this reason, which are not pure technical reasons. So it's not a secret that I'm more in favor of cooperation. I think you've understood that, and I'm not going to pretend that this is something which is totally unknown. So I'm in favor of this, but I'm curious to hear from you. And this is where I'm going to ask you to vote. So I've put the question that way. Should we actively pursue cooperation between blockchain and antitrust? For you to vote, it's very easy. Two options. One, you go to slido.com. On the front page, you'll be asked for a hashtag. I've put the beautiful name of this series of talks. So that's one solution. Or solution number two, you can take a picture of the QR code that appears on the screen. And same, you can vote straight away. We'll give you 20 seconds. I see that you are, Volker, already active trying to vote, which is good. I'll give you 30 seconds, but in the meantime, I'm not going to stay silent. I thought I would be mentioning an experiment that I'm currently trying and implementing. What I'm doing is that I'm setting a psychedelic version of the cover of my book as an NFT. You've never heard about NFTs, maybe not, but what NFTs are basically identifications of digital objects on the blockchain, and what you sell is the identification of the thing on the blockchain. I was able to sell the first cover of the original cover of the book, which came as a surprise. So there is a market for this. I'm now trying to sell that one. So curious to see if there is a market for everything, as some economist says, or if it's not true. So I cannot see how many people voted, but so far what we have, and I think I've made the result public, 64% of you think that cooperation is a good idea, and 36% of you think it's not. So what I will do is that I will explore the yes part, knowing that I have quite a few people to convince here, which is good. First, thank you very much. You are making me very happy. The opposite would have been quite awkward, I think, but I'm aware of two biases. We tend to answer yes to surveys. That's the way our human brain function. And we also tend to please the interviewer, the person asking us the question. So knowing that I was in favor of cooperation, you may have answered yes because you wanted to please me, in which case, thank you very much, but I'm not going to take for granted that you think it's a good idea. I'm going to try my best to convince you of the facts. So why do I think that cooperation is a good idea, at least between those two? One thing that I've explored so far is the fact that they are pursuing the same objective, to free economic transaction from coercion. Of course, for blockchain, it's more than just economic transaction, but they're part of it, which is in turn decentralization, right? You could behave the way you want without having to ask for someone, can I do that? And being coerced not to do it. Something that I haven't explored yet, and which is to me fascinating, and I think at least equally important, is the fact that blockchain and antitrust are great complements. It could have been, to make it clear, that they were looking for the same objective, but in a very similar way, in which case cooperation would mean no synergy between the two, right? Because they would just act in a similar fashion, in which case their failures will not be fulfilled by the strength of the other. But luckily, this is not the case. At least this is what I defend in the book, because they are made of a different material. This is not a secret to any one of you. Antitrust is made out of the law coming out of Congress and parliaments. And while blockchain is also code, but a different one, that's not the code coming out of the Congress, but the code coming out of at the time, Silicon Valleys, and now for blockchain, it's a bit everywhere. So very different way to achieve decentralization. And from that, I think we see that they indeed can complement, and they have an interest in cooperation. That's what I want to explore. So that's point number 2. First, and maybe we have some computer scientists in the room, in which case I'm looking forward to the Q&A, but I think we can say now that at least when it comes to blockchain, code is not self-sufficient. The reason why I'm saying that, despite what Satoshi Nakamoto thought would be true, and the cypherpunks at the time in the 90s and 80s, is because sometimes a practice may come from outside the code and your ecosystem, in which case it is extremely hard for code to be efficient and to be able to battle against what's coming out of it. So I've taken here 2 theoretical examples, but I would then give you some concrete examples. Let us say, totally random example, not. Let us say that big tech companies will prohibit blockchain advertisements. I think it's fair to say that if they do that, let's say it's indeed not for security reason, but because they fear competition, I'm not sure what code can do. You can design the code of your blockchain all you want. The big tech companies have decided not to allow advertisement, which might hamper blockchain development, in which case we have a problem and code is not self-sufficient. And sometimes it might be that you have designed the blockchain a certain way, and you see that there are infringements to the law. Some, I'm aware, in blockchain communities would say it's fine because code is law and the law should never intervene, but yes, the law will be infringed. And if you want to enforce your right, then potentially you want more than just the code. So that's on the one hand. And I think for lawyers, for us lawyers, it's very easy to say the code is not self-sufficient. But, and this is where it gets scary, at least for the lawyers, there is something else, which is that the law is not self-sufficient, despite what we've been told in law school, in which 100% of what we've been taught, at least the way I was trained, and I'm not here to blame on my professors, they were great, but I was trained that if there is a problem, then I apply the law, right? This is what we do as lawyers. And yet the law is not self-sufficient. Let me just illustrate that point looking at competition law. Look at enforcement capacities. You've mentioned indeed the competition law antitrust project, which is coming out of this. But so far, what we see is that we detect very few of the infringements to competition law. In fact, we do have empirical work showing that we detect 10 to 20% of cartels, which are easier to detect than abuses of dominance. I could explain why if you want me to. But so it's fair to say that if you infringe competition law, in all likelihood, you'll be fine, right? This is what we see. And even though you may detect an infringement, if you try to enforce competition law in a foreign country, it might be extremely hard. Of course, this is not true for France and Germany. You can do that, no problem. But if you try to enforce Chinese competition law against a Chinese company in China, then good luck. And by the way, we know also from empirical work that the opposite is true. If you try to enforce US antitrust law against a US company in the US, knowing that you are a Chinese company, good luck with that. So we see that sometimes jurisdictions are unfriendly, and therefore, although you could apply the law, it's not being enforced. So that's one. And part number two, what we see is that there are infringements to antitrust. The law, I think it's none of our idea as antitrust lawyers that we could eradicate all of those infringements. Of course, you try to create the incentive not to infringe, but I've never heard anyone saying, yes, in 10 years, no company will ever infringe antitrust law again because we are too good. I've never heard that. And so I think it's interesting in that context to, again, come back to the idea of decentralization by a technical way, which is the blockchain way, and to look at it this way. If there is a decentralized ecosystem, it means there is no pilot in the cockpit of the plane. And if there is no pilot, it means there is not a single person who could say, I'm going to take the plane in a direction which infringes competition law. It's possible for private blockchain. I could, again, detail that, but certainly not for the public permissionless blockchain. No one has the power to command and control, which is to impose decision on others. You could, I'm not saying there is no control at all. It's more complex than that, but you cannot say as the core developer, that's it, I'm going to change the core software of Bitcoin. You cannot do that. So the power goes away, and with that power go also away all the practices which might be anti-competitive, or at least most of them, which benefits antitrust agencies. And very last point, I've mentioned the NFT, showing you the cover of the book. I think they are very interesting and more than just a fun way to acquire CryptoPunks or CryptoKitties or whatever you want to buy. But what you see is that they align value creation with value capture. What it means is that if you create something, you can then sell the thing. It is unique, or at least in limited numbers, which provides value to the thing. Of course, if people believe in its value, the same is true for money. It's just a matter of believing in it. And if people believe in it and buy the thing out of you, the NFT, then you've captured the value, right? You take the money, and this creates a financial value that goes to your bank account, which is, of course, not possible on Facebook. You cannot say to Facebook, I'm going to put a picture on Facebook and I want you to pay me. It doesn't work that way. So that also benefits consumers and therefore play the end game of competition agencies. So that's the beautiful story. But if I've read correctly, and I'm just going to update the result to the vote, 36% of you, how much now? 38% of you. Wow, so I've managed to unconvince someone, think that cooperation is not a good idea. So, and indeed, I think you might be right. And let me explore why. First, what we see is that you can indeed use blockchain to infringe antitrust in the real space. And potentially, you could say cooperation all you want. This will be a very big problem in the space. Let me take a very concrete example here. And indeed, apparently someone, or maybe some of you are interested in smart contracts. I'm more than happy to discuss smart contract outside of competition law, but for now, just looking at it from a competition angle, it seems clear to me, and I think I'm aware of a few companies doing that as we speak, that, of course, as we know, a smart contract is a potential transaction to be triggered if and when the conditions are met. If it rains in Paris, then you get payment from me. That's the idea. The question is, how do we know if it rains? We could discuss that, but let me avoid the question for now. Let me just say that the if condition can be that another smart contract is being triggered. If smart contract A is triggered, then I want to trigger smart contract B. And if you do that, what you end up doing is creating a way for governance, right? You create, which is kind of the rules of a company. If this, then that, if this, then that. But a smart contract is put on top of a blockchain. It means it is immutable. Again, I can discuss the exceptions to that, but that's the principle. And if it is immutable, you know for a fact it's going to be activated when the conditions are met. And this leads to the very famous prisoner dilemma that we've all heard about. The idea here, I'm sure as you know, is that you put two prisoners in separate cells. You're the police. You have no way to prove they've done something illegal. And so you try to nudge them to say that they've done something illegal so they can actually go to jail. The best outcome for those two will be to lie, right? If both prisoners lie, the police has no proof in my example, and therefore they won't go to jail. But the worst outcome is for one of them to lie while the other will confess, because then you go to jail for 10 years and the other one just for 1. So what you see is that if you play the game over and over again, which is that you keep them in cells and ask the question over and over again and say, well, the other one just said something, so you better say something as well. Most likely, the natural equilibrium is that they will end up confessing, which means they will go to jail for 8 years, which is not optimum for them. And this is what you see in competition law. If you collude with another company regarding the price of your beverages, if you play the game over and over again, there is a tendency that you will apply for leniency, which is the process by which you ask pardon to the competition agency in exchange for small favors. And indeed, cartels, collusions between companies are non-cooperative. You can never force the other company to keep on colluding with you, even though you may have a contract, but the contract is illegal in nature, so you cannot enforce the contract. But if the contract is a smart contract or a script, and you know it's going to be enforced when the conditions are met, then it means you know what's the behavior of the other player. And that could actually, I think, threaten cartel while they're alive. I think they may also explode more rapidly, but something to be discussed. But I'm interested in that question because contrary to just algorithmic collusions, which are better ways to collude, here what you see is that it changes the nature of what is a collusion. It is a more or less cooperative game, which is not something you have outside blockchain. So for that reason, very interesting and I think very dangerous for competition agencies. And some, luckily, agencies have seen the problem already. This is the former Assistant Attorney General for the Antitrust Division in the United States, Makande Raim. And in a speech that he gave last summer, 2 summers ago, he actually saw that indeed smart contract creates the capacity to implement better cartels, better from the point of view of the companies. So that's one very important tension between the two. Another one here is when you try to abuse your power in the real space, so to use blockchain in a way to impact the inside of the blockchain and also the real space at the same time. Let me be concrete, taking an example. Let me say I'm the port authority of Rotterdam or Antwerp. And let me say that I impose that if you want to ship something to the port facilities, then you have to use a smart contract, which is something which is becoming increasingly common. If I do that, if the blockchain is private, meaning that I can choose who can use the blockchain, and if I deny access to that blockchain to just one of the shipping companies, then I can make the point that the blockchain is essential to the business and that therefore denying access is an infringement to antitrust law. So here again, you see that there is a tension between the way you may use your power to use blockchain in a way to impact the market. This is a bit technical. I will just avoid that for now as a matter of time. But let me now mention when we see infringement inside the ecosystem, where I think, again, code is not self-sufficient, but where there are some strong tensions between blockchain and antitrust. Case number one, which I think is the very first one that ever happened between competition law and blockchain, is the bitcointalk.org case, in which a blockchain developer named Ryan Gallagher argued that because he was kicked out of this forum, it became impossible for him to access great blockchain developers and therefore to put a competing blockchain on the market and to disrupt Bitcoin. This is the basic idea. And he said this is an infringement to competition law. You've abused your power to run the forum, basically. Ryan Gallagher lost the case, first because he refused to pay the fees, which is never a way to please the judge, but also because, of course, it will be really hard to prove that without access to one forum, you cannot put a competing blockchain out there. I mean, there are plenty of counterexamples. But the idea is interesting. It means that, again, power in the real space can impact the inside. There is currently a case in Brazil in which they are investigating whether by denying the creation of bank accounts to blockchain developers, big banks have abused their market power. The case was dropped, and the tribunal within the agency said 2 years ago, you're going to reopen the case because there is probably potentially something there. So that idea, I think, is very powerful and important. Case number two, United American Corp versus Bitmain. What happened in that case is that they disagreed regarding the size of the blocks. If you are involved in the ecosystem, you may understand why. This is a matter of scalability versus decentralization, no right and wrong. Long story short, some users forked the blockchain and created a chain split, which is the process by which you duplicate the entire database and you say from now on, if you want to use my version, you have to comply by my rules. Of course, you can do that. We can do that right now if we want. We could fork the Bitcoin blockchain, but I don't know how many participants showed up today. Most likely it will be a failure, right? No one will use our version and it would just disappear. So when you do that, you want to convince people to use your version of it and that it has been a success. Allegedly, what they've done in that case is that they went to China right after the fork and they rented computer power from a Chinese company. And by doing so, they were able to show that there were computer power put into their version of the blockchain, and they argued that therefore the fork and the split was a success, that users moved to their version of it, when in fact this was just them renting computer power. Now, I'm saying allegedly because they couldn't prove. We know that indeed the Chinese company put computer power there right after the fork for just a few days and then disappeared and never reappeared. But we couldn't prove that this was for the purpose of pretending that the fork was successful. But it could have been a different story otherwise. Case number three, potentially the most important, at least if you just look at numbers, but we love to do that as antitrust lawyers, in the history of the field. What happened in that case is that the creators of that cryptocurrency, Tether, argued that it was a stable coin. What it means is that the token of your blockchain, instead of being volatile and depends on demand and offer, actually will not vary, or will just vary strictly according to another value in the outside world. In this case, they said 1 Tether equals $1. So that's very easy. The value is always stable. And that's where it's interesting to understand the technique. What they were able to do with that blockchain was to issue tokens into their wallets. They had the technical power to do that, which is not something possible for Ethereum or Bitcoin. But here it was possible. So what the creators have done is that they have issued Tether into their wallet. And then they went to the market and said, well, we're going to exchange those Tether with other cryptocurrencies, which was very easy because everybody thought that 1 Tether equaled $1, so zero investment risk. Now, we know that this wasn't true, that this was a lie, because if you say it is a stable coin, then you have to have here the US dollar backing all the Tether you've put on the market. But here they add about 5% of what they issued. So this wasn't true, and they got actually sanctioned by the CFTC in September of last year, 2021, $14 million. What happened is that two researchers from the University of Texas saw that, published a paper on SSRN, see the power of SSRN, and within a month, people downloaded the paper quite a lot, actually, something like 15,000 times or something like that in just a month. And eventually, the value of the entire crypto market exploded for nearly 500 billion US dollars. And the people who invested in Bitcoin and other cryptocurrencies right before are now suing Tether creators because they lied about it and they think it's their fault if the market exploded, which I'm not sure it's true, but why not? And they are asking 3 times the amount of what they suffered, which is 1.6, I think 1.4 trillion US dollars. It's such a high number that in French, there is no word to say trillion. This is to tell you how big a number that is. So you see that there are indeed some tensions. And I just want in 2 minutes to explore then what do we do? And why I think that still cooperation is a good idea. I think the worst thing we could do is to pretend that there is no mutual aggressions between blockchain and antitrust, that everything will go well. No one will ever use smart contract to infringe the law. You will never see infringements within the ecosystem. If we do that, that's a recipe for failure. And we know it's not going to end well. So what I propose instead is that we actively pursue cooperation. And in part 3 of the book, chapter 13, 14, and 15, I try my best to explore what it could mean. Of course, I'm far from having all the solutions. I hope I have maybe half a quarter solution somewhere, but maybe not, who knows. But so what I propose is that on the side of public institutions, to be concrete, if you make a distinction between enforcement and regulation, first starting with enforcement, I think it would be a good idea, if we enforce antitrust, to start enforcing it against the players outside blockchain, trying to infringe the inside of blockchain, right? So the example I gave you with advertisements, I think this would create trust between blockchain users and antitrust enforcers. 2, if you have to sanction blockchain users and participants, then of course you do it, but you may want to do it in a way to preserve blockchain chances of survival. And here we know Darwin 101, that the thing you want to do is to maintain what differentiates blockchain from non-blockchain products and services. And I think decentralization, for example, is a big part of it. If you re-centralize blockchain because it's more convenient, if you say you're going to put someone in charge of the Ethereum, I think it will be inefficient because you cannot force them to do that. But let's say you find a way. What you end up doing is that you centralize the blockchain, which is not a blockchain anymore. And I'm not sure why people will use this version of a centralized blockchain. And so you've lost the highlight of using blockchain. When it comes to regulation, there are some trade-offs. I don't really have the time, but I just wanted to show you that it's not going to be easy because you cannot maximize all the objectives of regulation at the exact same time, which I think here, when it comes to blockchain regulation, are the most important: manageability, objectivity, accuracy, and flexibility. So we need to discuss. And I think a good way to do that would be first to stop with the gimmick, we are tech neutral. I think this isn't true. I've told that to the European Commission with whom I work. They try to maintain blockchain and make sure that people use smart contract, which is not neutral. You are in favor of it, and it's perfectly fine, right, to assume that. That's 1. 2, comfort zones. We may want to try and innovate and see if we change the blockchain that way, what does it create? Are people still willing to use it or not? Of course, in exchange for those comfort zones, you want to give legal incentives, no enforcement action letter, and tax incentive. Why not? So far, I'm always amazed to hear, especially coming, let's say, from the UK, that they struggle to attract companies to apply to those comfort zones, such as sandboxes and safe harbors. So we may want to work on incentive, and I think we have work to do here in the space. 3rd and final point, regulatory capture. I think we need to worry about that. What we see is that there are big players trying to capture blockchain regulation to prohibit it. That's one way to eliminate competition, for sure. And there is another kind of public capture which we never mention, which is a big problem, especially at the European Commission, which is the public capture, meaning regulators trying to capture regulation in a way to preserve their interest as a regulator. Let me take a concrete example. You may have heard that Facebook announced 2 weeks ago that they will drop their cryptocurrency. There are lots of problems. I mean, there were lots of problems with this currency. I've written a paper on the subject exploring the data protection problems and computational problems, a lot of problems. But for the first time, at least to the best of my knowledge, the European Commission introduced investigation against a product that does not exist yet. Why? Because the power to print money is, of course, an important one. And having private competition in the space did not please institutions. Maybe they were right. Maybe it's good that they've done that. But some other times it might be less good. And I think we need to worry as to when blockchain is going to start competing with the state, what do we do? Do we ask the state to regulate that, which is a problem that we had already with the internet? Lawrence Lessig, in a famous book, wrote one paragraph which is fascinating, saying that we cannot trust the state and we cannot trust the companies, so we're basically F-word. But I leave it up to you as to know what to do here. And the very final slide I want to show you is on the side of blockchain participants, what do we do? We need indeed, I think, to ease legal enforcement. And I've listed here several mechanisms. If there are computer scientists in the room, you may for sure, you for sure will ask me questions which exceed my computer science knowledge. But what I've done my best is to explain what is a modifier enums chameleon hash to the European Commission. And I end up saying that I do not know which one is best. I think ideally, we will create a way to intervene within blockchain ecosystems after practices have been implemented, not before. The idea that you can prevent infringements by default, I think, is wrong. Always think about the movie Minority Report. If you've seen it, you know it doesn't end well. So I think it's good if we can avoid that. On the contrary, if you try to create a way to intervene, what you want to do is not to re-centralize blockchain by saying the European Commission can just intervene whenever they want. Otherwise, it's not a blockchain anymore. And I think we need to test. That's why I think we need, again, comfort zones, maybe agent-based modeling, maybe lab experiments that's for universities, et cetera, et cetera. So I think it's good if we talk about those issues right now, especially knowing that blockchain is immutable. My question is, do we have a deal? Did I manage to convince any of the 38%? And very final points, as you indeed kindly retweeted on social media last week, I've organized a conference with some top officials and academics, and I've published the video to the entire conference. It's 4 hours long, so it's a long one. But if you want to have a look at that, they announced send the European Commission level what they want to do as to NFT in the United States. So to add a good time. Maybe you won't, but yeah, maybe you want to give it a try. So thank you very much. Again, I will put the link to the presentation in the chat, and you can access the book, and more than happy to stick around for questions.